So, episode 28. So, in this video, we're going to talk about debt restructuring still. But our specific topic will now be asset swap and equity swap, if we still have time. And of course, the accounting for forgiven debts if we still have time. Because we already have finished the modification of terms in the past episodes, and I hope you still remember those. But before we go and talk about those, let me present to you the possible questions that might be asked of you in the exams and quizzes related to the debt restructuring modification of terms. Okay? So number one is that you can be asked about the amount of gain or loss on debt restructuring. Now, the answer to this question, if there is no substantial modification of debt, is zero. Because if you remember, we are still going to use the old liabilities balance, right? So this gain or loss here in question number one will just be positive if there is substantial modification. Okay? And possible question number two is that you can be asked also about what are the journal entries to extinguish the old liability and establish the new liability. So this is somewhat similar to question number one because the answer to this is none if there is no substantial modification. Because again, there will be no new liability that will be considered. Okay? And actually, the old balance of the liability will be preserved. So that's question number two. So possible question number three. You can be asked about what is the new effective rate that will be used after the date of modification of terms. So this question number three is only applicable also to cases where there is no substantial modification. Because if there is, the effective rate that will be used after modification of terms is just the effective rate previously used by the debtor before the modification of terms. So basically, you just have to copy the effective interest rate already that were used by the debtor. Okay? Now, number four, you can also be asked about the journal entries after the modification of terms, like this. Okay? And number five, you can also be asked about the interest expense amounts after the modification of terms. And number six, you can also be asked about the revised liability balances after the modification. And number seven, sometimes you can also be asked about the current and non-current portion of the liability balances after the modification of terms. Okay? So you need to prepare how to answer all of this. And they are already given in the past episode. So go back to it. Okay? So up next, we will have the asset swap. So stay tuned. So let's have the debt restructuring asset swap. Okay? So the concept is simple. The debtor can pay his debt with cash, so the debtor offered a non-cash asset or assets instead. So that's the only concept of this asset swap. Like in our illustrative problem that I will be presenting to you now. Okay? So let's start with the illustrative problem. So here is the familiar timeline again. And let's assume again that BBG, the debtor, paid only up to here at the end of year 3 because, again, of financial difficulties. So, meaning, these two payments here will now never happen. Now, BBG negotiated with the creditor to pay a non-cash asset instead of cash. So, the details of such asset are here. So actually, it's a transportation equipment and it's a flying car. So it can be classified as a depreciable asset. Okay? So that's the first information. Another information is that its historical cost is 4 million. But it has already been used. So there is an accumulated depreciation already of 2.5 million. Which means it only has a book value of 1.5 million. But if you ask the market, it is still sellable for 2 million. So that's its fair market value. Okay? Question? If the creditor agreed to accept this flying car, what will be the journal entry related to the asset swap? Of course, debit the whole liability balance of 1,923,426 because we are already canceling it. Okay? And then of course, credit the transportation equipment. The question is, what is the amount? The amount that we're going to use is net of accumulated depreciation. So we're going to use the book value 1.5 million. Okay? So it's not balanced, right? So the balancing figure is, it depends. If the debit amounts are smaller than the credits, then loss on extinguishment of debt will be debited. And on the other hand, if the credit amounts is lacking, then we credit gain on extinguishment of debt. Okay? So in our case, in this illustrative problem, we have gain on extinguishment of debt because the debit amounts are higher. So the gain is 423,426. Okay? So as you can see, we ignored the fair market value. We used the book value only. Okay? So you need to remember that. Again, in the asset swap, we don't need the fair market value. We need the book value. So again, you need to remember that. Now, there is actually a much proper journal entry than this because this is simplified. So let's talk about that journal entry after this. So, in making a more formal entry, let me tell you first that actually the accumulated depreciation amount should not be netted against the historical cost, just like what we did here in this entry. Why? Because this cost, this 4 million, is actually recorded in a separate account title. Maybe it's recorded in transportation equipment. And of course, the accumulated depreciation is also a separate account title. Okay? So let's consider that fact in making the formal entry later. Okay? And another one is that sometimes the company, just like here in our example, instead of reporting directly this balance of 1,923,426, the company sometimes separates this balance to two accounts, which are the undiscounted principal, which will go to the loans payable account, and the discount on the loans payable, which is a separate account title also. So, in our case, in this illustrative problem, we have here 2 million as the undiscounted principal balance. And if you are following our series, you might have known already that the original principal amount in our illustrative problem is actually 5 million, and it is payable in installments of 1 million every year. And since, in this problem, we assume that BBG paid until the third year, then we assume that 3 million out of 5 million has already been settled. That is why we have here the undiscounted principal remaining of 2 million only. Okay? And of course, this discount amount is just the difference of these undiscounted and discounted balances. So, we also need to consider that in making the formal entry. So, if we make a formal entry, we will debit loans payable, but we should use the undiscounted amount of 2 million. And also, we need to credit also the discount on loans payable worth 76,574. So we are doing that to cancel the balance of these two. Because remember, loans payable account has a normal balance of credit, and the discount account as a contra liability account has a normal balance of debit. So the act of debiting the loans payable and crediting the discount account cancels its balances or reduces their balances. Okay? Now, aside from these two entries, we are also to credit transportation equipment account, just like here. But we are going to use the whole cost, the 4 million. Okay? But never worry because we are going to debit also the accumulated depreciation. So we are doing that to close both the accumulated depreciation and the transportation equipment and be reduced to zero. Because again, if we are BBG, we are giving it away already as a payment. Okay? Now, after that, we need to debit loss if the debit amounts are lacking. And on the other hand, if the credit is lacking, we need to credit gain on extinguishment of debt. So, in our illustrative problem again, our credits are lacking. So, we need to credit gain worth 423,426. And that's it. That's the formal journal entry. So, this entry might look like it's very complicated, but the substance of this entry is the same with this simple entry. Okay? So that's it for asset swap. So let's cut this video short and let's talk about equity swap in the next video. So if you've learned, please click like, subscribe, and hit the notification bell and select all to be updated on my next videos. So again, thank you for watching and see you on the next one.